Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, as always, keep in mind that there's risk involved with any trades that you take, so you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard as we typically do, making use of the calculation features within the order window in our web trader and our app that help you to calculate your exposure and potential profit before you place any trades. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the web trader platform. Keep in mind the web trader allows you to trade on both MT4 and MT5 accounts, but with advanced functionalities that you don't have if you trade directly from those platforms. But you do have the option to trade from either location. And also the same features you see in our web trader are also available in our app, which also allows MT4 and MT5 account access. So if we log in here in the upper right hand corner, we'll be in our web trader. And as we get started on the fundamental analysis, today we can talk about the past couple days, what's been in the news leading up to today. And so two big stories really have been driving the markets, and one of those stories being the lower court. When I say lower court in the U.S., I mean below the Supreme Court level. A district level judge has tried to block the tariffs that the Trump administration have been putting on different countries as a negotiating tactic for trade deals. And in the U.S., it's true that Congress is supposed to vote on and negotiate what the tariff levels will be and approve them rather than being dictated by one person. Now, the flip side of that is there are some emergency powers that presidents hold in the U.S., and one of them allows for economic emergency type situations to impose potentially things like tariffs under a specific act that was passed in past years. And so there's kind of a back and forth between the Democrats who seem to keep wanting to get in the way of what the Trump administration is trying to do, and obviously the Trump administration on the other side trying to do things that they think is best for the economic situation of the U.S. And so it seems to be a bit political what the district level judge did, basically saying all of the tariffs are illegal except for a handful of them that happen to have maybe been still in effect during the Biden administration after the first Trump administration, which is interesting because they were passed the same way by the Trump administration from the executive level down. And so why they're picking and choosing which tariffs are legal and which ones aren't, it kind of makes it look a bit biased and partisan. And so I think there's going to be an expedited review to the Supreme Court of this lower court decision, thankfully from the Trump administration perspective, and I think from the U.S. business perspective, the ruling stated that the tariffs could stay in place until it's decided by a higher court. And so I think the district level ruling, they anticipated that it would go to the Supreme Court, and that's exactly where it's headed sometime soon. But in the meantime, it has caused a lot of stress on the markets. The markets don't like uncertainty. They like certainty one way or another. Are there tariffs or aren't there tariffs? When they were first coming in, there was nervousness about them being there. Now there's nervousness that they might have to be taken away because the tariffs are starting to be viewed as maybe positive for the U.S. With a lot of companies choosing to break ground and start building factories and businesses within the U.S. In order to avoid the tariffs, which is kind of viewed as positive if there will be a lot of jobs for construction and also for hiring once those local factories and businesses are built. So a lot of companies that were overseas seem to be flooding into the US because of the tariffs. And so these positive things that were helping to drive the markets up in relation to the tariffs, now there's fear that, okay, well, what's going to happen if the tariffs have to be removed? Does money have to be paid back to the European Union and to China and to all these countries that have been paying tariffs now? It could create a big mess. And so we'll see what happens with the expedited review to the Supreme Court. I anticipate in the coming week or so, you'll probably hear a lot more about it, maybe even sooner. And so we have to keep an eye on that headline and understand that that has created a lot of nervousness on the markets. And not just the US markets. This is a global thing, obviously, with trade wars and trade deals going on kind of endlessly for the past months. Now, the other big story is the fact that a week ago or so, there was a financial summit in the US, a place called Jackson Hole. It's the name of a city in Wyoming. They call it the Jackson Hole Conference or Summit, where financial experts from around the world and leaders all come and meet each year at this conference. And so the surprise out of that meeting was Jerome Powell seemed to be much more open to rate cuts coming soon in the US. And leading up to that, he was not. For the past year, ever since just before the presidential election, where he surprisingly did a 0.5% rate cut instead of 0.25%, which some also said seemed political because it buoyed the markets under the Biden administration right before the US elections. Ever since then, he has said that he's not going to cut rates because of uncertainty in the markets, tariffs, etc. So for the past year, he's really been adamant about data-driven reasons to cut interest rates and that he wouldn't do it until he saw the right data. And then all of a sudden, a week ago or so at this Jackson Hole Summit, Jerome Powell seemed very much open, even alluding to the fact that rate cuts are coming in the US potentially, 1 or 2 before the end of this year. And who knows what size rate cuts. So that created a lot of optimism prior to this whole district level judge putting a dampening effect on the tariff situation. So we've got 2 different driving forces right now. One that's positive with the markets, especially US markets, saying, oh, interest rate cuts might come, and which is deemed a positive thing typically by businesses, to have lower interest rates for expanding business, having business loans, etc., and also lower rates on home loans, lower rates on credit cards, etc., for the individual consumers. And so the whole rate cut idea was really positive for the markets the past week or so. And then in comes this situation with the tariffs and the uncertainty that that's creating. So we've had a gap down at the open this week. The US markets didn't open until Tuesday because of the Labor Day holiday on Monday. We had a big gap down on US markets, and the rest of the world kind of followed that. A lot of uncertainty. Gold has been flying up this week to new highs again, as well as platinum trying to go up. So the precious metals as safe havens have been very bullish this week, and it's largely fundamentally driven by this whole tariff situation. And if you also combine the fact that fear about tariffs causes safe havens to look attractive like gold and platinum, but then also, hey, rate cuts might be coming, that weakens the US dollar, which makes gold and platinum maybe look attractive as well. So you had kind of a double whammy there driving gold and platinum up. Because if you think the US dollar will weaken with rate cuts, you get out of the US dollar and maybe buy anti-inflationary type safe havens like gold. And at the same time, you buy gold if you're fearful that there could be a crash with the stocks as well. So if you're fearful of the US dollar weakening and you're fearful of stocks maybe dropping off, where else do you go? No wonder gold hit all-time highs again 2 days ago and 1 day ago. And today it seems to be a bit of a pullback now. So we'll look at some opportunities there potentially with gold if you have some interest, if you think that fear will still be there. It's depending how quick will this expedited review to the Supreme Court in the US happen. I don't think it happens overnight. The Trump administration yesterday already went to the Supreme Court, the lawyers, and requested an expedited review. It doesn't mean it happens today, right? It doesn't mean it happens over the weekend. So that fear will likely still be there about the tariff situation. So a good place to start right now then would be gold, since we understand two major drivers, fundamentally speaking, have pushed gold up to all-time highs. Right now, the short-term signal is sell. Okay, I can understand that after so much climbing. These signals coming from Trading Central are technically based largely. We see the pivot line here that got broke below with the pullback. It's come back up towards the pivot line, which could act as resistance. And so if it doesn't break this resistance, it likely could push back down to the take profit zone on the sell signal. Now, I don't like following signals that the fundamental news works against. And so we just named two stories that work against this signal. Technically, it looks like a good technical signal. It broke the support level. It came back up near what should be resistance now from a technical strategy perspective. When support breaks, like it did here, then it tends to act as resistance, barring any new fundamental news. And so then you'd think this should push back down again. But the fact is, this pullback, this drop was after a huge climb yesterday. So that pullback could just be some profit takers in what could still be a larger uptrend, technically speaking, if we look at larger candles. And when you look at the fundamental news that drove this movement, it still exists. Fear about the tariff situation still exists. There's no resolution yet. The understanding that rate cuts are more likely than ever, at least more likely than in the past 12 months, to occur again in the US, which then could drive inflation back into the US dollar. Lower interest rates means cheaper loans, more cash in hand, which means prices could get driven up again, devaluing the value of the US dollar if interest rates get cut too fast. So Trump administration, be careful what you're wishing for. So, okay, you've been calling for rate cuts. Well, here they come, maybe. US dollar already weakening in response to that anticipation, and gold pushing up with maybe fears of inflation on the US dollar again in response. So those two things still exist. Expectation of rate cuts, which could weaken the US dollar and make safe havens look attractive, and fear about the tariff situation. So in this case, I don't take this sell signal. You might if you're a purely technical trader. If you're taking into account the fundamental news situation, I filter the signals to see if it fits the current news. If right now an article that came out said, if I see a headline that says Powell reconsidering any rate cuts because recent data was too strong, if something like that came out, then I'd say, yes, sell on this because the fundamental news is in favor for the US dollar to strengthen and maybe pull gold down. But that's not the situation. The fundamental news is actually working against this sell signal. And so I would sit this signal out and actually take a look at the opportunity to see if possibly the opposite direction could make sense. And I'm trying to get my gold chart to show up here. There we are. Actually still showing the Euro Danish krone. I think I found a bug. Let's type gold up here. And now we have the gold chart. Okay, so starting the big search at the top, and that loads the proper chart for you. So we're looking here then at 15-minute candles. Let's look at larger candles, maybe 4 hours. And as we look at the 4-hour candles, we can see the climb up here and the pullback. No, we're still on Euro Danish krone. It's still not bringing me the right chart. I apologize, everybody. Let me refresh. I think it's just a connectivity issue on my side. It's not a bug. Okay, now we have the right chart when I refresh the platform. That looks more like what I expected to see. Here's the pullback. Let's go to 4-hour candles. And here's the big climb up. This climb here to all-time highs was directly in line with the news about the tariffs and really started prior to that with the news that Jerome Powell was more open to rate cuts in the US. I see some questions, so let me just pause for a moment to read. Okay, so You're making a point that the current gold price, the price is priced in now, and that rise is priced into the potential rate cuts. Exactly. A lot of times you buy the rumor, sell the fact. Okay. The rumor is, hey, rate cuts might be coming. US dollar weakened and up went gold, right? Rumor is, hey, tariffs could be canceled and it could create a big economic problem in the US. Fear about that. Gold went up to all-time high. My point is, though, if you like the pullback that occurred, because we already established where the buyers were willing to take this, which is, as I draw my line up here, if you like the pullback and you think that the fundamental news still exists in a way to create momentum, then at some point you might be interested in the price that it pulled back to. And what we can see here is this pullback already reached a buy location here on this pullback and climb, and now we're here on the 4-hour candles climbing again. And so if we go to 1-hour candles, we can see here just about 6 hours ago we were down at this support level here. So had we done this webinar not that long ago, here's the first support level I would have drawn. Okay, this was resistance, push down, resistance, and then on this candle was the breakthrough candle. And then it didn't look back. And so as this pulled back and hit this old support level, which was old resistance, new support, I should say, old resistance level, new support level, this was a spot that would have made sense if you understood that the news still exists, that drove that upward movement. Then once it came back down to a price that you liked, you could have tried to go with that news once again. And it bounced really nice off this support level and up it went. Now the question is, as you stated, maybe the price is cooked in now. So if it is, then perhaps it can't break this high here. If you're going with a buy, that might be a spot that makes sense. If you think there's just going to be a sell-off on gold now, then obviously you don't enter. But the point is the fundamental news still exists. And if you believe that will be a driver of this movement still, barring any updates, you know, if the Supreme Court announces, hey, we'll see the case today, gold could come flying back down with anticipation that, hey, they're going to reverse this lower court ruling. Okay. If and until that happens, I think there's probably nervousness on the markets, and gold has some opportunity to try and push back up at least to the resistance level. Okay, typically after a large climb and a pullback, there's a retest. Not always, but many times there's a retest of those highs at least one time. Okay, but very good point. Now, your next point, you say tariffs have been with us for a while. Why is it now only the factor? I think maybe you missed the point that a lower court in the US only in the last 24 or 48 hours had a new ruling that all of the tariffs are illegal. And it's amazing that just a district court judge can affect the entire country's policy in the US. And the Trump administration has already pressed that issue to the Supreme Court as well. And they kind of spoke on that lower courts can't rule for the whole country. They can only rule for their district that they represent. But in this case, once again, now it has to go to the Supreme Court because an entire policy of the US is affected by one regional district court judge. Okay, so this is a new situation. It's not something about tariffs that we've known ongoing, as you're suggesting. It's something new that just happened, that this court ruled just within the past 48 hours that all of the tariffs are illegal. And so that's the new situation, and this is where gold really went flying up in the last 48 hours, after that judge made that ruling. Okay, so very good questions, and you're probably not the only one that maybe missed one of those important points there. But of the two factors you raised, the idea that the price is now cooked in to the news that was known over the last 24 or 48 hours, or in the case of the interest rate expectations over the past week or so, that point is well taken. A lot of times the prices get there before the act actually happens. And so the one thing that still could drive gold more than maybe the interest rates, which maybe that's cooked in now, is the fact that there's a lot of uncertainty about the tariffs. And the Trump administration is on the record saying it would be a disaster for the US economy if the tariffs were deemed illegal by the Supreme Court. They're flat out admitting it would be a disaster and could crash the US markets. And so with that type of talk, no wonder there's nervousness, and gold is rising up potentially, maybe even further than what it already did. Now, you have a couple options here. You could sell gold if you think the pullback is still going to occur further. There's nothing wrong with that. If you feel like the fundamental news should make gold go up, but you're not sure when the upward momentum might start back again, then a pending order could make sense. If you want to buy, but you're afraid it'll pull back further first, okay, then a pending order at a strategic location could make sense. And I would suggest that if you think the pullback will occur a little longer, a pending order just above this support level for an entry could make sense. Maybe 1/3 of the amount total you want to put into the move. A second pending order at the next support level, which I see right here. Okay, so I could be looking that if it drops down to this level, to have a second entry to buy on gold. And the reason I say 1/3 at each level, 1/3 here, 1/3 here. And if you're afraid also gold could just go back up right now, the other third would be a market move right now. Okay, spreading the risk, having multiple entry points potentially depending on what happens, and trying to still go in the direction of the fundamental news, but with the understanding some of this price is cooked in and we could get further pullback before we get further climb. Okay, and that completely makes sense to me. So what I would simulate is this, and this is not to make a decision for you that you should think gold will go up further. That's not my point. My point is, if that's how you read the fundamental news, and we'll use this simulation as in simulating that maybe we believe the fundamental news could continue to be bullish for gold, since nothing really has changed with it. And it's all about entry point then. In that regard, if you already think directionality, the momentum's up, but you're just concerned about when to enter now after all the climbing. So then we stagger the start potentially. That's a strategy you can use when you're not sure about timing, but you're pretty sure about direction, assuming no major headlines change in the next, say, 48 hours to 1 week. So if that's the case, so then my first entry, I might use AvaProtect. Okay, why? Because there's a huge potential for volatility to have a large drop that could then be followed by a large rise. All that could occur in a 24 or 48 hour period easily. Okay, so if that's the case, and I'm worried that on my first entry that my stop loss could get hit easy, and I don't want to get knocked out and then it goes the right way. Could easily happen in this situation. It was just 6 hours ago that it was down here on this support level. Okay, it bounced nicely. Why? Because the buyers are there, the fundamental news is still there, but the sellers obviously were testing this support level. And if it breaks, could easily come down to the next support level. I could see that happening. So market move, in case it just runs up with those same fundamental headlines, I'm going to protect for a couple days with AvaProtect, okay, as an example. And so I'll take a trade size that risks the amount that I'm comfortable risking for the cost of the protection, because I won't lose a downward movement during the protected time period. I only lose the cost of the protection. So quarter of a lot costs me $680 or so. That's a little more than 1% of my balance. So maybe I go 0.22, and that's a little less than 1% of my balance. 619, 620 would be 1% of my balance. And there's nothing magic about 1%. You can risk 0.5%, you can risk 2%, whatever you're comfortable with. But the point is, you should have a risk management plan, okay? You know, I wouldn't suggest risking your whole account on one trade, for example. You can if you want. You know, the payout could be huge, but you know, that's a very risky way to trade. So I'm managing my risk in a way that I'm comfortable, and you should do the same. And so I see the cost of the protection for 2 days, which by the way takes me to Monday, takes me to the 8th at 5 p.m. my time. No matter what this does, I'm only down the cost of the protection. And then if it does crash the wrong way and I re-enter here, well, I've lost less than 1% of my account, and now I'm re-entering at a much better price, and I could easily gain much more than that. Okay, so it's a trade set. I'm trying to profit on the potential three entry points, and hopefully on the first. Okay, so I set this up then. Where would my take profit be? I already suggested that maybe I only need my take profit to be just before the high that it already reached yesterday. Okay, so I'm not asking for the world here. I'm only asking to return near where it was just yesterday. So 35.79 or so it hit. So let's say 35.78 for a take profit. Okay, potential profit slightly more than the risk. Okay, I could make 821. I'm paying 605. Now I have to consider, is that worth it to me? It kind of isn't. Why? Because I'm paying this up front. If I hit this take profit, I've only made a couple $100. So in that regard, that setup doesn't look so attractive to me. Okay, so this is why you map out the technical analysis. You decide, is it a proper entry point for me for my risk management plan? And right now, that doesn't feel like this protected trade for 2 days makes much sense to me to pay that much up front if I'm going to take profit so soon. So I have a couple options. I could say, okay, the next round number is 3,600. That's only up here. If indeed this is going to continue upward momentum, we saw this go up near $100 in 1 day, or even more. Okay, so to go from where it is now to 600, a nice round number, it would only have to break yesterday's high by a short bit. So if you start to look at it that way and you say, okay, there's no other resistance past yesterday's high because it's an all-time high. So I can start to play around with the take profit, especially since I have until Monday at 5 p.m. So I don't want to take profit so early if I have such a long period of protection. So now I start to look and I say, okay, 3,600 seems realistic if there is a continued uptrend. If it breaks this high, that's the next round number. And that would bring me more than double what I'm paying for the protection. Now it starts to feel like, okay, that makes more sense. And so once I have that outlined, now I can go ahead and buy my protection. Okay, so very easy to do your risk management. And not only within the order window are you looking at the risk, but you're looking at the potential profit as well and deciding, is this trade even worth it for me? And so I take a look and I say, okay, I'm going to adjust that take profit that maybe if this does go up, like we're thinking it could with the tariff situation, if there's more fear about the tariffs before there's a resolution, it certainly could break this high and head towards 3,600. Okay, so I'm in about 1% now. I already paid for the protection. So now I let this trade carry out today, tomorrow, Saturday, Sunday, and Monday until 5 p.m. with no more risk at all. And if it drops, I'm not losing anything more. If it goes up, I can be very patient until maybe it does, and then I make a nice profit. Okay, and I went in with a certain level of risk. Now, if I'm comfortable risking 1% per trade and doing 3 trades, so I can do 2 more, 1/3 on that move, 1/3 on the next trade, and 1/3 on the next trade. Okay, so where's my next setup? My next setup is if it pulls down to 35.15 to this support level, I can have a pending order at this support level. So once again, I can say buy. I can now say execute when price hits. Really, it should say if price hits, not when. We don't know for sure that it'll come down. I suspect it might, which is the idea of not putting a stop loss yet on that first trade. I put protection instead. I just have to make sure as that protection nears its end on Monday on that trade we just simulated, that then I check and see, do I want to close it? Is it in profit? Do I want to add a stop loss if it's still running? Because once that protection ends, then I need to protect myself in another way maybe on that trade. Probably by Monday at 5 o'clock, it will close one way or the other. The way gold's been moving, it'll either hit the stop loss or I'm sorry, it'll go down, trigger another buy trade on gold with these pending orders, and maybe I'll close off the first trade to collect the payment from the protection, or maybe it'll hit the take profit by then. I suspect one or the other will happen. Now, with the second entry, potential second entry, if it tests this support level again, Then I'm looking at execute when price hits, say 35.15, which is above this support. Could even say 35.13 because the support is technically at 35.10. So if it hits 35.12.50 or 35.12, something like that, that's the entry, sorry. I'm typing the take profit. 35.12, 35.13, somewhere around there could be execute when price hits. Take profit then, if you enter here, could indeed be this resistance, since we're entering lower, 35.77 or so. Don't have to ride it all the way to 3,600 to have a significant profit. So 35.77 over 16,000 profit with 2.5 lots. Where would the stop loss be? In this case, because it's right off the support level, if it breaks that support by any significant amount, that establishes a downtrend still. Probably would get out if it drops below 3,500. So if it hits 35, say 95, I might be looking to get out of that because then maybe it's pushing to the next support level, even 35.97. Okay, so stop loss 35.97. Wait, sorry, 34.97. And so that's a risk of about 1/4, less than 1/4 of the potential profit. So in that case, I can go down a bit further. 34.95 would really have to be a broken support and a true move to hit my stop loss in that case. All right, so risking about 1/4 of the potential profit. Now I just need to adjust my trade size for that pending order entry. And the take profit being at a spot where it doesn't even have to break the high that it hit yesterday, okay? If it does indeed bounce again off this support. Stop loss would have to break the support. So then we're looking at trade size of 1 lot would risk 1,700. So I'm looking for around 600 for my sweet spot here to be around 1% risk. So if I do half a lot, I'm risking 850. If I do 0.4, I'm zeroing in 680, 0.35, just under 600, 0.37. I think that's got it, okay, 0.36. So now I'm risking about 1% of my balance, just a hair under, to try and make over 2,340. Okay, that's with a normal stop loss at this point, because eventually if it keeps breaking support levels, eventually one of the supports will hold and maybe bounce. Okay, so not that you couldn't look back and maybe do a market move with AvaProtect, but you have to do a market move to have AvaProtect. We can't do a pending order with AvaProtect. So we've got a stop loss set up on the second potential entry. It's ready to go, risk managed. And so now when we click buy, that's a pending order. It will only open if the first trade goes bad. Okay. And obviously, if you see the fundamental news change, you start to see headlines and it says, oh, maybe they start alluding to the fact that it seems that the Supreme Court will reverse the tariff ban from the lower court. Then you could real quick cancel those pending orders if you think that gold then has a reason to come back down, to not be pushed upward by the fundamental news. So you have time to cancel those pending orders too if the fundamental news changes. And the first move, the market move, you're protected anyways, all the way till Monday, okay? Now, we're looking at what if this one goes bad? It breaks the support, hits the stop loss, and goes to the next support. Okay, so here's your next entry, 34.73. And again, assuming you still agree with the fundamental news at that point, okay? So you have to check back at the headlines and follow the news a bit. And if you still think there's reason for fear on the markets and the price breaks through and comes near this support level, then there's your next entry, okay? So take some active monitoring of the news with this strategy. 3 potential entries. First one, market move. The next pending orders down around 34.73, and it would be the same process then. You enter by execute when price hits, This one then is 34, just above this support level, 34.73 or so. Take profit then if it's entering down here, could be the next resistance level rather than this one up here. So each one gets subsequently closer. Or if you wanted to take advantage of this entry and go still towards the all-time high, then obviously you have a larger potential profit. In that case, say 34.77, or maybe you start to cheat it down because you're getting a better entry point, and maybe you say if it just comes back to where it is now. So 35.45 or so. So take profit, 35.45, willing to get out at a little bit lower price, but it's still a large climb because you get such a good entry on the second entry. So then we're looking at 18,000 possible profit, stop loss. If this is your entry, we're looking at, if it breaks that support level down to here, let's say 34.55, or even a little lower, 34.50. You certainly would be through this support and down lower, 34.50 could be the stop loss zone. Okay, again, triple the profit or more compared to the potential loss. Just adjust your trade size. We go 0.4 lots, 920 risk, 0.34, 782, 0.3. My risk starts to get closer to where I'm comfortable per trade, 0.27. And now we're just about there, 0.26. Looks like the sweet spot, just under 600, so less than 1% risk to go after 1,872 potential profit. You understand if you lost those first two trades, you're only down about 1,200, 1% on each. If you win the third one, that's an overall profit still of 1% gain because you're gaining about 3% or so on this trade. So it's a trade set where maximum loss 3%. If you win any one of the trades, you have an overall profit. Okay, without having to have any type of massive risk or crazy entries. All right, so technical analysis determining the exact location of the entries and exits, strategically speaking around support and resistance levels, and fundamental news determining the directionality. Until the fundamental news might change. If it changes, then any trades that didn't open, perhaps you eliminate them. Okay, but we go with the news as we know it, fundamentally, to determine directionality and enter if we think the technical setup is at the right spot. And so another pending order ready to go, and now it's sitting and waiting. So we've got one trade live. Okay, I don't make anything out of the fact that it's in a slight profit right now. I mean, if you're a scalper, maybe you already closed it, but not with protection on it. Because remember, we paid 600 or so for protection, so we'd be taking a loss if we closed it with this small profit. We need greater than 600 profit in order to be an overall profit on the trade. So we let this run. You don't have to let it run until the protection expires. If it gets up $1,000 or so, I might close it early before the protection ends because maybe I like the profit. Maybe I like the overall 400 or 500 profit. If it makes back the cost of the protection and then some profit, at some point I could close early. But I'm going to be patient with it for sure because of that protection that we paid for. Okay, don't have to be nervous that it'll hit our stop loss for the next 2, 3, 4 days. Okay, can be patient. If indeed it goes the wrong way, we don't lose anything more on that trade, and then we can re-enter with these pending orders to still have an overall shot at an overall profit without risking much percentage-wise on the account. Okay, any other questions, comments about this trade setup that is really fundamentally driven in terms of directionality, but as you saw, the technical setup and the risk management is around the technical movements on the charts. Okay, beyond the webinars, there's another question I see. To learn ideas about fundamental analysis, certainly you can just start reading more. Any type of financial news, websites, magazines, etc., online magazines these days, I guess, that can be helpful to really start helping you think the way that the analysts think and the professionals think. It's really about patience. It's about looking at bigger picture type things. For short-term trading, you're going with the momentum as it exists right now. For longer-term moves, you're more patient, waiting for your price level, understanding the bigger picture, like with that of rate cut decisions and larger monetary type policy. So there's a bit to it to get experience with the fundamental analysis. Our webinars are a good place to go, but also you can do some reading and such on your own, which I highly suggest that you do that. One place that you can go on our platform to help you with that reading is our Market Buzz. So, and that's a good segment to move to our next step here. If we go to the Market Buzz, it's another feature that we offer beyond the webinars, is that you can come over anytime and see what's the latest news on something you're interested in trading on. A lot of times there's more news that's relevant when it relates to stocks, but you also can check out what is the latest news on commodities, indices, currencies, cryptocurrencies, everything that we offer. Okay, is there new information on Bitcoin? Click and you can find out. Okay, if I want to know, well, what's the latest news on Open Door Technologies? Tell you the truth, I haven't heard of them, but they're trending all of a sudden, and this wouldn't be here if we didn't offer it. I think it's on our MT5 platform. So I can click on this and see, okay, what's going on? Why are they trending so much? Look at the price rise expectation. That's not typical. 36% expected rise. I mean, you don't usually see that. So if you want to look at the technical trend analysis, you can see it here. Resistance levels, expected price that it would reach, where the support levels are. Everything's outlined here for you from a technical perspective. The RSI readings, everything if you're into technical trading. Okay, so the signal is buy. It's a strong buy signal, 36% expected rise. So now you can read the fundamental news and see, well, why is that? So this is where fundamental analysis comes in. Okay, in general, okay, there's positivity about rate cuts maybe coming. That I can understand, but there's got to be something specific about this company as well for me to expect that type of rise. Okay, so this is where this tool comes in. Improved revenues required before Open Door Technologies Incorporated stocks 100% jump looks justified. So this article sounds a little skeptical that it won't go up 112% or even maybe 36%, but 112% expected jump. That's usually when they quote numbers like that, they're talking about the next 12 months. So you can click that and read the story and find out more. Okay, what are they talking about here? Who is this company? Read a bit about it and find out why are they talking about something like 112% jump. Okay, so you make up your own mind by doing your own fundamental reading, and this tool makes it really easy to find news that's relevant to what you want to trade on. So without knowing anything about this company, I just found a potential opportunity using the Market Buzz. I see the technical signal and I see articles that I can read, several articles that came out recently about this company, and see if it makes up my mind. And if it makes up my mind, then when the US market opens, if this is a US stock, which it is, well then I'm ready to go. If I like the open price and the trend, I jump on it because it seems to have some kind of momentum, both technically and maybe fundamentally. But I would say read some articles to decide if the fundamental news supports it or not. That one article I pulled up doesn't necessarily. You have to read it, okay? And read a couple articles that came out recently. I mean, these are timestamped. Some of them came out just in the past couple hours. Some came out yesterday, which is still relevant. And you can read those articles and see, well, what's going on? Why is it trending so much? Okay, and we can do that with any instrument that we offer so that you can have your own fundamental feel as to which way is the wind blowing right now for this instrument. Okay, so that's another tool you can use on our platform for fundamental analysis on your own, beyond the webinars. And then also the economic calendar. And you might say, oh, economic calendar, those have been around forever. I've looked at them before. You know, you see the data and the movement occurs so quick. So how do I know what to do? Because I don't know what the data will be in advance. It's always after the fact. And I can show you with these tools within our economic calendar, we'll pull up today's date, that in fact, let's go to the proper month. Today is the 4th. Now, you have to click on the same date twice. Now we're in the right month and the right time. So some of these announcements, what you'll see, like the jobless claims out of the US, did not occur yet, but you can anticipate as the numbers come in, what direction different currency pairings, in this case with the USD, you can switch to the one you prefer, length of time after the last announcements for initial jobless claims came in. Let's leave 4 hours. And if this comes in above forecast, meaning bad news, okay, these are jobless claims. If they're higher than expected, what happened in the past when they came in higher than expected? Well, 100% of the time, if the jobless claims came in worse than expected, the USD strengthened and pulled the euro down. Okay, well, that's interesting. So 2 out of 2 with an average range movement of 52 pips. It dropped when the forecast, when this came in above forecast, which is bad news because it means more jobless claims than expected. Makes sense, maybe. USD strengthens as a safe haven currency on bad news. You might expect the opposite. You know, it's bad news for the US economy, so shouldn't the USD weaken? You don't have to play those head games with yourself because you can just go by the data here. This is data-driven trading. What happened in the past when these came in above forecast? Not once did it go up, and twice it went down after 4 hours. So my initial inclination might be, oh, buy on the euro if it's bad news for the USD, for the US. But this is showing you that that inclination in the past would have been wrong. After 4 hours anyways. What about after 1 hour? Because time is important. So in the first hour, you do have the expected effect. Bad news on initial jobless claims. In the first hour after those numbers came in, the euro climbed against the USD. By how much? About 20 pips. 19 plus pips, average range movement. Okay. What about in the first 5 minutes? Went up 12 pips. Okay. Not a huge reaction actually to these numbers. What about if it comes in the other way? What if it comes in below forecast, meaning good news? Okay, I see a lot more movement, a lot more action here. It happened more times, but half the movements were up and half the movements were down. I don't see a statistical advantage there. So I already know that on the 4 hour time period, the movements are going the opposite direction I would expect based on just rational common sense. And also the movements are unpredictable, especially when they come in below forecast. Half went up and half went down, at least after 4 hours. What about after 1 hour? Okay, there's more of an effect again. So the time period here is important with this announcement. It seems that the momentum dies after the first hour. So we had 70% of the time the USD strengthened when it was good news. Initial jobless claims below forecast, that's good news. USD strengthened 70% of the time with a pretty decent sized move. Okay, and in the first 5 minutes, US strengthened also high percentage of the time, but only went 18 pips on average. Only one of them really went in the first 5 minutes. The rest you had time to trade. Doesn't take 5 minutes to trade, by the way. You get your trade off in 30 seconds or 5 seconds. If you see the data came in below forecast, you say, okay, past data shows majority of the time this is going to drop. So in the first 30 seconds, you get trade off up here. After 1 hour, you might be looking to close. The majority of the time it went your way after an hour. Maybe that's when you get out because the history shows after 4 hours, okay, half of them are back up. Okay, 50% of them are up, whereas after 1 hour, 70% were down significantly. 30 minutes, 80% were down. You might even be looking to get out after 30, 45 minutes because 80% were down initially, and after 4 hours, it was 50-50. Okay, so for each announcement, the movements have their own patterns. You find your own unique trading plan. The past data can determine when you're interested to enter after an announcement. If it moves a certain way, a certain distance before you get in, maybe you're out because you saw in the past it only moved X number of pips on average with the announcement. If you can get in with an opportunistic spike in the opposite direction you expect after 1 hour or 4 hours, then you're more likely to take the trade based on what the past data shows it might end up doing the majority of the time. So very powerful data that you can find very quickly without having to look at the old charts, which would take hours and hours to do. This finds that data for you right away. Okay. And by the way, there are huge announcements tomorrow that you'll see more significant movements than what you see with these announcements. And so tomorrow we have the non-farm payrolls out of the US. That by far will be the largest announcements tomorrow for any country. The non-farm payroll announcements deemed typically one of the largest announcements out of the US every month. So job expectation numbers look weak. Okay, we're looking expected increase in jobs only 75,000. A healthy economy in the US usually is like 300,000 jobs created. Okay, so this very low expectations here. What would happen if it comes in higher than expected? Or in that case, what if it's even worse than the low expectations? You never know with what's going on with the tariffs and everything else. So in the past, if this has come in above forecast, okay, 88% of the time it dropped. So huge strengthening of the USD, huge percentage of the time. Look at the dropping if these numbers come in above forecast. Okay, that convinces me. What happens in the first 5 minutes? Okay, half of them go up almost, or go down very little in the first 5 minutes. Okay, these ones you could have got in on. These ones, maybe you're too late. They're already 95 pips down after 5 minutes. But if the numbers came in above forecast and you say, wow, in the past, after 4 hours, every one of them dropped over the past year. And if you see in the first 5 minutes this type of movement, like these ones, and you don't miss it like these ones, then maybe you're interested to sell if they came in above forecast and you get this entry, because you see that after 4 hours, look at all the downward movement that has happened in the past. The USD strengthens over the longer period of time according to this data set. Now, it's not going to win every time, okay? But if you try this 10 times on each of these announcements over the course of the weeks and months, and you win 7 out of 10 times, or even 6 out of 10 times, or even 50% of the time, if the take profit is more than the stop loss, then it's a winning strategy. And looking at this data, there's no reason why you can't find some announcements that can work for you with this type of strategy. What if it comes in below forecast? Okay, 75% down, 25% up. Okay, it's not 100%, but boy, it looks like no matter what, after 4 hours, the USD is strengthening, whether the numbers came in good or bad. That's interesting. And if I look in the first 5 minutes, okay, a lot more upward movement than down. Okay, so you can make what you will of this data and decide what makes the most sense to you. For me, with that data set, it makes more sense that if the jobs are better than expected, I trust the past data that there's downward movement, because it makes sense in my mind also that the USD would strengthen with better than expected jobs numbers. Okay, the opposite direction, where it showed a lot of upward movement in the first 5 minutes and very little downward movement when the jobs were worse than expected, I don't know if I trust after 4 hours in that case that necessarily it will continue to have downward movement. But you make what you will of each data set and decide in advance, if it comes in this way, then I'll trade that way. Or if it comes in another way, then maybe I'm not interested in trading because the data set maybe in the other direction is less convincing. Or sometimes you're convinced either way, depending on how it comes in. The data looks strong. Okay, so you can go through any weekend, Saturday, Sunday, and look at the upcoming week at the upcoming announcements and decide which announcements you plan to trade on in advance and be ready for it. Okay, all right, I'm sorry, I know we carried on a bit longer than usual. Usually it's like 40 minutes, the sessions. We'll end it here because I think there's another webinar about to start. I have to get out of the way. So thank you all for attending. Good luck with your trading the rest of this week, and just watch yourself on on the risk side, okay? I know there's a lot of volatility right now. All right, everybody, good luck. Bye for now.